Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. Well, lots in store for 2025. We've got a new U.S. president and also an uncertain rate path ahead for the Federal Reserve. And it looks like companies are cutting jobs again. So how should investors position themselves for 2025? To help us out, we've got John Tsai. He is the portfolio manager at Eastspring Investments. John, good morning. Thanks for joining us today.
Good morning. Thanks for having me.
So let's start first with a bit of a review of 2024. What were your main takeaways with how all that played out? What were the big surprises and highlights for you?
I think if we look back to a year ago, around this time last year, it would have been very hard to predict what would have happened. I think we were probably not as bullish in the beginning of the year. And the year actually ended up probably a little bit better overall, depending on market. Certainly, some markets did much better than others. And so Taiwan, for example, had a huge rally, mainly driven by all the tech and AI-related names. Other markets, Singapore also did quite well, and it was a bit of a flight to safety there. And some other markets didn't do so well. Korea, for example, did very poorly. And China actually recovered more in the latter half of the year from about September. So it was a really mixed market overall, and really depended on market by market, and sort of the fundamental stories behind each of those markets.
Now let's unpack some of those stories. Can we bank on what played out last year to repeat this year and just write out those stories? You mentioned tech doing quite well, but at some point valuations will come to question.
Right. So valuations are kind of a little bit all over the place. There's some markets where, for example, India, it's quite stretched. You would say Taiwan is somewhat stretched as well. But apart from those, you've got on the other side of the spectrum, markets like China, which are, even after the rally in fourth quarter, still looking quite attractive. So in terms of the trends that happened last year and some of the themes, I think some of them will continue. For example, I think one of the big things that really drove the market was positive earnings revisions. I think that will continue to be a very strong force for this year. On tech and AI, I think that's a bigger question whether that will be sustained. But there's some peripheral, maybe second, third derivative ideas within tech that could be a play as well. And on top of that as well, I think maybe there was some move towards, particularly in China, towards more safe dividend-paying companies with strong balance sheet. I think certainly before policy is more clear, that's probably an area I think investors may rush to.
How are you reading China right now when you look at all the policy measures being rolled out? You had a bunch of stimulus measures at the later part of last year. And then I suppose going to this year, there's a bit of uncertainty with Donald Trump coming into the picture where we have tariffs, but we don't know exactly what that will entail. So we might see a bit of reaction coming forth from China. How are you positioned for China? Are you looking at the valuations and thinking it's a bargain right now? Maybe it's time to increase my exposure?
Yeah, you're right, Ryan. I think, China has been a bit tricky. I think what we've seen so far, what the government's introduced in terms of policy and stimulus has been moderate and hasn't been really significant. And I think, the government's probably trying to see what the reaction from the U.S. after Trump takes over, what policy is going to be before they make more definite announcements on fiscal stimulus, for example. We are looking at China more closely. As you said, it's had 3 years of underperformance. Valuations are now at levels where I think it's difficult to ignore completely, because while there are some real structural issues that need to be resolved, for example, the property segment and just overall economic health of the country, you do see pockets of opportunities. Certain industries, certain companies have very positive fundamentals as well. So in those areas, we're looking very closely.
Yeah, you mentioned structural issues, and that comes to mind property, youth unemployment, and we did get stimulus measures, but there are questions about whether they are enough. Do you think it's enough? And of course, where are the opportunities you're looking at when it comes to China?
Okay. Whether it's enough, I think the policies so far haven't been enough. I believe that there will be more to come, but it's more measured so far, and it's really going to be a bit reactionary to what the U.S. policy is going to be and the overall outlook. But as you said, the structural issues are pretty deep, and I don't think they can be sort of fixed overnight. The property issue, the youth unemployment, those things are going to take a lot of time to roll out. That said, as you mentioned, there are pockets of opportunity. One sort of theme that I think may make sense is, we're looking at companies, for example, that are benefiting from sort of a down trading in consumer. So whereas a few years ago, the very ultra luxury segment did very well when Chinese consumers were very strong. Now you're seeing a lot of opportunities, maybe people down trading in certain types of consumer or services. So hotel chains, for example, that are more moderate luxury but priced more affordably, they're doing quite well. We think that stimulus from the government would also provide opportunities for white goods, for example, although that's kind of tied with property as well. So other areas that we would look at are areas where the exposure or the risk to negative policy, for example, sanctions or that sort of thing by the U.S. are lower. So maybe very sensitive industries like EVs are going to face a lot of pressure, but there are exporters that are in segments that are not strategic to the U.S., that they would put up huge barriers.
Now, John, talking about opportunities, a lot of focus has been on AI in the past year, and a lot of people have been jumping on the NVIDIA bandwagon, which was up 170% in 2024. When people are thinking about jumping on the AI opportunity train, how are you approaching this? Where are the opportunities when it comes to AI?
I think AI really spans a lot. We don't have the direct AI plays so much in Asia, but we've benefited in our portfolio from being exposed to memory, for example, and there are other areas that you could participate in that AI theme. For example, servers and server infrastructure, even sort of like racks and even cooling systems. There's stocks that are very dominant in that space globally. Also, I think application-specific ICs, ASICs, that's another area. It's another proxy to, similarly to the U.S. companies like Broadcom and Marvell. We have names like that as well in Asia, particularly in Taiwan. And also networking, I think, will probably be a good play as well because, AI is going to require a lot more bandwidth. So I think networking is another area to look at. But particularly semis has been a big play and semiconductors will definitely be required in the whole AI chain. So whether you play the semis from the foundries all the way to the OSATs, that whole supply chain, there are a lot of opportunities to look at.
Yeah, talking about AI, something to consider is what happens when Donald Trump comes into the frame when he enters the White House on January 20th. What is going to be the impact of Trump in the White House on equities, particularly in Asia?
Well, I think everyone's looking at what's going to happen now when he takes over, but we've already seen him kind of softening his stance a little bit about tariffs. And I think that's really the realization that ultimately U.S. consumers will have to suck it up with inflation, and that inflationary pressure is something that they have to think about. So it's clear that U.S. policy on tariffs and other measures are going to be very important to the region, and in particular the countries that have greater exposure to U.S. exports. So that would be like Korea, Taiwan, Vietnam. I think those are the countries that are more susceptible to any measures that the U.S. takes. That said, I think it's probably going to be a good year to be opportunistic and be stock pickers instead of trying to play general trends because the trend right now is still quite uncertain.
All right, a bit of a choppy, I suppose, year ahead as we steer through some headwinds and lots to watch out for. Helping us to navigate what's in store is John Tsai. He is the portfolio manager at Eastspring Investments. John, thanks so much for your time and insights this morning.
Thank you.
All right, catch up with you again soon. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.